Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Stephen Guilfoyle. We call him Sarge, founder, president, Sarge 986. Thank you so much for being with us. Before we get to your detailed trades and such, big picture on the market, Sarge, today?
I would tread lightly. I'm about as high in cash as I ever get right now. I just don't like this environment. Not just for the geopolitical, but also because the interest rate environment has been, the control of the belly of the curve on out to the long end of the curve has been taken away from the Fed by the free market, which is a good thing in the long run. But as a trader, it's a dangerous thing. So I think it's a time to stay in what you know you're good at, but stay thin, stay skinny, stay nimble. Arthur Cashin used to say that, remember?
Yeah, stay nimble. He used to, in his note that he used to give out here on the floor of the stock exchange, he was tremendous and greatly loved. He is tremendous and greatly loved, but he was on the floor of the New York Stock Exchange, no longer. Let's talk about Crowdstrike, a name that's jumped out at you. Sarge, tell us more about that.
All right, Crowdstrike, they've made great strides in their business last couple of years, arguably the best-in-class cloud-based cybersecurity firm, along with Palo Alto Networks. I'm long both, by the way, and Zscaler, which I'm not long. Will not report their third quarter until November 29th, so you got a little while. They're looking for an adjusted EPS of 74 cents on revenue of about $777 million. That compares to 40 cents a year ago on about revenue growth of 34%. Out of the 37 sell-side analysts who cover this name, 37, that means all of them, have increased their estimates for third quarter revenue over the past 90 days. Going to look at the chart, the stock has been in an ascending price channel pattern since the start of the year, consistently rallying off of its 50-day SMA. This pattern is a pattern of continuance until it breaks one way or the other. In other words, investors like myself ride these patterns for as far as they'll go. Relative strength is quite robust, as the daily MACD shows strength as well as all 3 components of the MACD in positive territory, and the 12-day having now moved above the 26-day. Target price, $237. Pivot, it's moving, but right now it's $206 because it's the upper trend line. My add point is down to the 50-day SMA, currently 171, and my panic point is $160, which is where that lower trend line is right now. So that's also a moving price right there.
Yeah, understood. So what do you think here, Ben? I know we took a look at Crowdstrike yesterday, but Sarge always brings a new perspective.
Yeah, no, Sarge mentioned this one's made some great strides, and I think the price activity as of recent reflection thereof. I've got a 30-minute candle chart here behind me, and you can see throughout most of September, we were very much sideways, right? And then you can see also some high conviction as we've rallied out of the range that we had been in around 166 recently. What I like about this chart is it really shows the 2 phases of development, right? You have that sideways consolidation, overlapping, rotational phase that doesn't exhibit a lot of conviction one way or the other. You test the upper extreme and the lower extreme a couple times, but for the most part, price is very random within that. And then you get that really high conviction phase to the upside where the market breaks out of this range here. What we're waiting to see is, do we form another new area balance at this upper level? That's exactly what the bulls are looking for. Now, as I take a look here, I also want to step away from these intraday charts. I want to try and figure out where we are going on the bigger picture. In this instance, you can see it's very well defined at the upside as we look at these areas of consolidation, which continue to form at higher and higher levels. Again, we were just talking about this one around 166, the breakout that we've seen, the high conviction vertical phase out of that horizontal overlapping random rotational phase. And as long as we hold, well, while in that phase above 150, we were okay. Now, again, we're waiting to see if we can balance at this new upper level. And then in this instance, 166 becomes the line in the sand in terms of the area the bulls don't want to see it below. But yesterday we were talking, Nicole, about this instance, as you mentioned, Sarge. We looked at this yesterday, and what I was talking about how is these areas of value that I look for, they help us determine trend, but they can also help us determine trend no longer being present. In this instance, it had been to the downside, right into those October lows that we saw, the lows that we saw last fall, into the end of last year. And then look, as we came out of that balance, 115, this move that we've seen and we just recently mapped out and through 186, again, a significant move is because you could see that also coincided with that range that we had been in the summer of last year. So definitely a big move up here. It's significant, and there is some momentum behind it.
Right, okay. So you talk about this momentum, Sarge. How quickly do you think this could all happen?
Oh, I mean, this is when it's in a pattern like this, you really can't tell, because this is one of those, the whole cybersecurity area is overvalued relative to the rest of the S&P 500 because we're betting on future growth. So these are very hard names to value. So what you have to do is you have to be able to play the technicals, play the fundamentals, and play momentum. You have to be very well-rounded to trade these kinds of names, and you have to recognize when the moving support and moving resistance, because they're both rising at the same time, when you're closer to one or the other, because that's when you adjust your exposure.
Right, okay. Thank you for that. Let's turn our attention over to Eli Lilly, a different group, completely different.
Yeah, completely different, but it's going to be a similar chart. All right, Eli Lilly is trading at 47 times earnings, which is really expensive for a pharmaceutical, for big pharma. All right, what we're doing is pricing in future sales of the diabetes, probable weight loss, probable kidney failure treatment Mounjaro. I said that incorrectly. The drug has so far only been approved for diabetes, is believed to be very close to being approved for weight loss, and will probably be tested soon for kidney failure. Second quarter Mounjaro sales grew to $979 million from only $16 million the year prior. Earnings are expected for Lilly on November 2nd. The street is looking for $2.90 on revenue of $8.9 billion. This will be up from a year ago, EPS of $1.98, and the sales growth number will be 28%. Over the past 3 months, of the 12 analysts that cover this stock that I have found, only 8 have increased their estimates for revenue generation. So this is going to take a little time to really get the ball rolling from here. Taking a look at the chart, this, as I said, this is another stock living inside an ascending price channel. Relative strength has moved from weakness to strength very quickly, as has the daily MACD. All 3 components are now in positive territory. The 12-day has reasserted itself versus the 26-day. My target price is $718. My pivot is 625, which again is moving because it's the upper trend line. My add is the 50-day SMA of 551. And my panic is just below that, 550, which again is a moving target because it's the lower trend line.
Okay, so that's good that you know where to be most careful, those levels to watch on the downside. Ben?
Sarge is right. It is a very similar chart, not only because we're trending higher, but we're also in and attempting to break out here right now, getting to a vertical phase in a couple of the bigger picture time frames. But let's begin with just the move we've seen since the beginning of the month. It's been very well defined. We're talking bottom left to top right. We were trading down around 512, and we've topped out recently all the way up around 630. A significant move here as this occurred over just a very short period of time. Looks like the ball is starting to roll here, Sarge. I went ahead and I identified some of the areas of consolidation that have formed because there's been pauses along the way up here, right, where the market has just kind of held and then kind of regained composure. And these are the areas that we use to reference whether we're continuing to see trend in this instance to the upside. And it has been, right? Currently balancing right around the $610 level. So I don't think the bulls want to see this below 572-ish, we'll call it. The structure is not as nice and easily well definable as I'd like it to be, but you can see, again, bottom left to top right. It's tough not to establish that, right, in this instance. Easily identifiable trend here, looking a little bit of a bigger picture, 4-hour candle chart. We're going back to the end of February, beginning of March, and we were down around that 300 level. You can see these areas of consolidation continue to form. It's not just on the 5-minute. This occurs across all time frames, all products, bull, bear, trend. I mean, and in this instance, you can also see what I was talking about, the vertical phase, the breakout right now. This is a high conviction phase. We're looking for energy follow through, higher highs, higher lows, and we're getting that, right? You can see that through this trend environment to the upside. The momentum higher, a little bit more time on this chart shows that we've been trending higher since, well, back in 2020, this stock was trading around 130. And then again, these areas that formed at a higher levels, just sort of solidifying that working assumption. You can also see the significance associated with this breakout because, again, we're now in a vertical phase. The bears want to see us sustain this upper level price activity and at some point establish a new area of consolidation at a higher level. But there's some energy here with this one as well, and there's a very well-defined trend to the upside, and we're in an easily identifiable initiative phase here.
Yeah, and so that's the point. What do you think here? Final thoughts on this one, Sarge, on Eli Lilly?
It's really all about the success of Mounjaro. Jim Cramer, who you know well and who I used to work for, has called Mounjaro possibly the greatest selling drug of all time. when it's all said and done. So it's really, although they have a lot of other drugs in the pipeline, and it's a big company even without that one name, that one potential drug, which is already a drug for diabetes, is going to be the one that makes this the breakaway pharmaceutical of the industry.
Yeah. All right. So let's get, obviously, UBS and all of Wall Street has been talking about the defense stocks, and UBS saying, look, U.S. defense companies likely to benefit from rising military spending. We know the geopolitical concerns we're facing. Week to date, General Dynamics is up about 9%, but you look at Raytheon, Lockheed Martin, you know, every single one of those is jumping this week. Your thoughts on General Dynamics, a name that you often pick. You often stay with some of these defense stocks when you're on the show.
Yeah, I've been on the show. I've spoken about Lockheed and Northrop in the past. And now we're going to talk about General Dynamics. I'm long all three of those, by the way. GD is the current manufacturer of the M1 Abrams main battle tank. It's the manufacturer of the Virginia class, that's the latest class, of nuclear-powered submarines, attack submarines, I should say. And most importantly, because this is what we're short of right now, they manufactured the M1128 155 millimeter high explosive howitzer round. All right, the Ukrainian army's out of them, NATO's out of them, the U.S. Army's almost out of them. So this is a severe shortage here. The Army just signed them to a $974 million contract to make howitzer rounds, which, if you know anything about the kinds of contracts, that's really expensive for should I call them stupid munitions or dumb munitions? You know, usually that's those kind of price tags are say for higher price items. All right, earnings are expected on October 25th. Wall Street's looking for $2.94 on $10.1 billion. That's not out of sight. That would actually be a slight contraction in earnings on 1% revenue growth. This is about free cash flow and the expected pop in demand that will follow the U.S. Army's contract. All right, this firm so far for the half year has generated $1.82 billion in free cash flow, and will probably generate more in the second half. Looking at the chart, I'm going out on a stretch here a little bit, so this may be where Ben gets me a little bit. I'm trying to play chess and anticipate the next move. One can easily see this cup formation that starts back in November of last year and stretches into October of this year. Now, I'm thinking here, after this little gap that would need 224 to fill, that we create a create a handle off of this cup. So I'm going to have a couple of prices to throw at you. Right now, the pivot is 256 because the pivot is on the left side of the cup. If we get this handle, the pivot will trade down to, will move down to 240. Once we have a handle, it slopes downward. That would take a target from 295 down to 276, which I believe is much more achievable. All right, my add point is going to be from 228 down to 224, and my panic would be a break of that 50-day SMA, which is currently $222.
Right. I love how you give us all that. When we talk cup and handle and we're looking at your projected price targets, and we talk tanks, submarines, and explosives, we're paying attention. I love it. I couldn't love it. I couldn't love it any more than I love it right this second. Ben?
Yeah, I like those levels as well, Sarge, especially the 256 area. That's key, I think. I'll show you why in just a second when I pull a longer-term chart here. But Sarge is talking about a pop in demand. We've seen a pop in price, that's for sure. You can see it behind me in terms of the more intermediate, or I should say more granular time frame. We are looking at a 30-minute candle chart. You can see the sideways consolidation again, and then the separation. And you'd see the two phases of development here as we look at this chart. It's pretty well defined. And then again, as I look at the area that we're forming right now, actually, let's just move away from this. I want to show you what's going on here with a longer-term trend that's playing out here. Again, 4-hour candle charts now in this instance, definitely well defined to the upside. You can see this is the move we just looked at, the high conviction phase, the vertical phase to the upside out of that range we're in around 221, and then you can see the balance now forming pretty well defined here up around 238. I want to show you also as we get into those levels that Sarge was talking about, the potential cup and handle forming here. That's that high he was referencing from last fall up around 256, which if you notice actually coincides with the highs that we saw in the beginning of 2022 as well. So this is an area that you want to watch here. We're starting to build momentum through the middle of this range, this balance area again around 238. You've got some pretty well defined lows down here also, but as long as they're above 197, we're still in a trend environment to the upside, attempting to get above that 256 level. If we do, we're going to look for a breakout to the upside. Sarge, you mentioned then your pivot, I think you said, would move up to 240. Well, you can see my pivot again right now at 238, basically $2. That's right in that same range here. So I think Sarge is onto something here, not only in terms of this name as far as what's going on here with GD, but also with the two other names that we looked at, both very well-defined trend higher.
Thank you both so much. It's great to see you both on this Friday, and appreciate it. Big three, always so great. Stephen Guilfoyle, we call him Sarge, Sarge 986, and our own Ben Lichtenstein on the charts. Thank you both. Right, good luck, CrowdStrike, Eli Lilly, and General Dynamics.